All right, let's start out this video looking at a little coffee shop that you can go to on the weekends. They play nice music and you can get Arabic coffee, which has a sweet cream, little sugar, and a cumin taste to it. It's quite delicious. All right, welcome back to another episode here from the channel, and hello from Saudi. We're going to be talking about taxes and what sort of tax situations you might be looking at by taking a job overseas, the pros, the cons, and as always, the idea is that you've probably heard a lot of rumors, you've probably heard people tell you things about what you can do with your taxes if you work a job overseas. What I'm going to do is try to dispel all these rumors. I'm going to give you an example. Okay, so it'll only be just one example. This is not tax advice. I'm not a tax planner or anything like that. But I'm going to give you my example of what I do. And so you'll at least be able to look at one issue or one person and better understand what your options are as far as taxes goes. So it will be, what's actually happening for someone that's working overseas. So I hope you get a lot out of this video, and we'll be right back. After years of military contracting overseas, and I'm getting ready to retire, I thought I would pass on the information that I learned over years of working abroad to inspire others to reach out, check out the world, see the jobs that are overseas, and learn something about yourself. Okay, so the first thing we're going to do is we're going to discuss, just again as a blanket over the whole video, I'm not a tax advisor. This is not tax advice. This is not financial advice. This is just what I do personally so that you understand. The first thing that you should understand is that there are some tax benefits for working overseas. And the idea is that you are able to shelter some of your federal and state taxes. Now, when and how does that happen? Let's talk about that. You take a job that is going to be, let's say, in Afghanistan. This could also be in Germany, could be in Japan, okay? Could be in Iraq. If you are going to a certain country, you need to find out what the tax situation is there for that country. So, like Iraq wants a portion of your taxes. Just be aware of that. Okay? Other countries do too. If you work a year in their country, they want a little bit of your taxes, even though you're a U.S. citizen. That's something you need to find out about before you accept a job. That might be the decision between you saying, I would like this much money or a little bit more to cover the taxes that I have to pay to that country. All right? So keep that in mind. What country you get sent to is important. In the case of Afghanistan, and in the case of Saudi Arabia, where I'm at now, I am not paying taxes to the host country, and I have this is how I set up my state taxes. Let's start out with state taxes, okay? So those two examples, first of all, Afghanistan, the time that I did there, the time that I did here in Saudi, other tours of duty that I've had, there have been tax issues. Iraq is one that had a tax issue, all right? They wanted a little bit of my taxes. But the state taxes, what I have done, you have to move your residence. This is best case scenario. Move your residence to a state that either does not have state taxes, all right, or some states in the United States will be, you pay state taxes, but if you're working outside of the state, you don't pay state taxes. Or if you're working outside the country, you don't pay state taxes. So check on that. That would open the number of states that you're dealing with. All right, you're not just looking at like Texas, Nevada, Florida, and just a few like that. I believe Wyoming is an excellent state for taxation as well. But there are some states that if you're working overseas, they don't take your taxes, all right? So that'll give you more options. So that is the first and foremost that I would say worked for me, okay, is to get into a non-tax environment as much as possible on the state side. The next thing to think about is going to be your federal taxes, okay? Your federal taxes are going to be looked at depending upon how long you spend outside the United States. So if you are outside of the United States greater than or equal to 330 days out of 365 days, a block, okay, you can withhold a lot of federal taxes. And I believe at the time of this filming, it's 104,000, your first 104,000 that you earn outside of the US. Now this changes if you are a government employee working overseas. This is for contracting. You are a contractor working overseas, okay? So it's different depending upon what your job role is and your job title. Again, contracting has certain benefits. Okay, you are an overseas employee. You're not a U.S. employee of the U.S. government that just happens to be stationed overseas. That's different. Okay, so you have that ability to shelter the first 104,000. After that, you are looking at beginning your taxation scale. So if you made 124,000, that 20,000 would be taxed, but it would be taxed as if you were beginning to earn taxable income. So the amount of taxes that get taken out of that is not that much. That's another benefit. You also have the ability to gift some of that money. So say you're making over 104,000 overseas. You have the ability to do a gift and look into the gift laws federally, because you gift people $15,000, that becomes untaxable, all right, on both sides. So look into that. It's a great way to be able to transfer some money to your kids and things along those lines. So that's another thing to think about. That can also help you stay outside of federal tax range as you start going up in the pay scales. Let's talk a little bit about what I said about number of days outside the country. One of the things you should think about is, when do you want to start the contract? Where are you going to go vacation? And when are you going to return back to the United States? Okay? So, first of all, you don't have to start January 1st. That's not the way it works. You can start any time in the year, as long as the 1 year that you spend outside of the United States working, out of that 365 block of days, which could cross over into another year, but out of those 365, you spend 330 days outside of the United States working, okay? And this is what I tend to do. I try to meet family outside the United States for vacations. You can go up to Canada. You can meet in Japan. You can meet in Germany. From the Middle East, Germany, you're just flying north. And you can hit Europe very quickly. And I'm sure your family would love to meet you in Europe and enjoy that. At the time of this filming, of this video, travel is tough. And so that's something to think about, is that you probably will just be away from your family for the full year. Because the chance of, at the 6-month mark, meeting them somewhere is tough because of the rules and regulations of travel right now. But in normal times, that works out really well. So plan your time to begin when you're flying out of the country. Mark that time when you intend to come back. So if you say it was like at the end of September, At the end of September is when you hit your 365 days outside of the country. In that case, or 330, whatever the case might be, as long as you stay out past the certain required days. At that point, make sure you let your company know that you're coming up to that. Give them that notice so that they can have your flights and all ready to go back to the U.S. You don't want to come back to the U.S. too early. That's why I say just push it out to 365. It's an extra month. You're getting paid for it, but you know that you got your days. Okay? So think about that. If you stay over a second year, then you come back and you visit your family for a couple of weeks in the United States and get out. Get back outside the United States, okay? And that's why I say sometimes it's good to meet in some place like Canada with your family. They get a nice little vacation out of it. You do too, or Europe or something like that. If you're on the Pacific coast, maybe Japan is a good option. And they can have a little vacation, and you can too, and you can meet them, but you're still accruing days outside the United States. One of the last things I want to talk about is preparing your taxes. All right. Of course, being a company that hired you, they're going to be, according to how you want to set it up, withholding taxes, which I don't do. When I'm working overseas, I don't worry about withholding taxes because I'm going to try and pay as little as possible. So I just basically set it up so that I get all my money in every paycheck. All right. Have a CPA do your taxes. It's going to be a couple $100 for them to do your taxes for the year, but they will be done right. And now you have a legal barrier between you and the IRS saying this person who's certified prepared my taxes. So you have someone else that's on your side with this whole setup, all right? And it can be confusing. State and federal wise, it can be confusing. Also, you've got a house at home, you might have kids at home. All of these issues are being looked at for your tax situation. And depending upon how you are structured as a contractor, all of this needs to be looked at. My CPA, because of my line of work, is very used to dealing with the situation and very used to doing the taxes as they need to be done. And that's important. That's important. So that they become aware of how they do your taxes. Again, it can cross over between 2 years, and so they have to know what they're doing. The CPA has to know what they're doing. Because my home state is Hawaii, a lot of people in Hawaii work overseas. It's just very common. So the CPAs in Hawaii are pretty used to this system. Okay, there's a lot of overseas contractors and a lot of international business people that live in Hawaii. So they spend a lot of time outside the U.S. Okay, let's summarize the taxes. Okay, first of all, if you can, get into a residency of a state that doesn't have state tax, or a state that if you're working outside the U.S., they don't charge you a state tax because you're not working inside the state or inside the U.S. And that will broaden your range of states. Next thing to think about is, as far as the federal tax, stay outside of the United States past 330 days and just push that out. If you go on vacation, meet your family outside the U.S. All right. You have the option to gift money. That helps you save a little bit more on your federal tax as well. You can set up some gifts for some family members or whatever. That helps to push up that non-tax income. And use a CPA, all right, to do your taxes. Don't try to do your taxes yourself. It costs a couple $100, but they get done right. The paperwork gets done. You can easily email back and forth to them wherever you are in the world, and they do your taxes for you. You digitally sign them, done. And that's about it. All right. Hopefully that, all the rumors that you've been hearing maybe about how taxes work when you contract overseas, hopefully that hearing my personal situation, all right, at least gives you an example of how you can structure your taxes overseas, okay? And what the pros and cons and the benefits are and things to think about. And so I hope this has been helpful. And please leave comments. Let me know if there's some topics that you'd like me to cover on overseas contracting. And I will talk to you again. Have a nice day.